Hi everyone, my name is Nouman Asjad. I'm a head trader at Blackline Trading, and in this webinar we are going to discuss the topic of supply and demand. To be very precise, we are going to answer three major questions today. Number one, what are the dynamics of supply and demand in financial markets? Number two, how institutions create supply and demand? And number three, how can we identify those zones and make good trading decisions? So with that being said, let's have a deep dive. Number one, let's understand supply and demand at the most basic and fundamental level, right? Let's say that you open a store and you start selling a piece of bread for $5, right? Let's say first day there are 5 customers, second day there are 10 customers, third day there are 30 customers, right? Just giving a real world example. What is happening in this scenario? What's happening in this scenario is, even though let's say the price of bread remains 5, the number of customers keep on increasing, right? Now in the financial auctions work exactly the same way. The only difference in the financial markets is that as the number of customers increase, the stock price also increases. And why it increases? Because the demand puts a very, very strong upward pressure on the prices, right? So buyers outweigh the sellers. Now, similarly, in the supply side, whenever there's more supply, whenever there are more sellers than the buyers, stock prices start going down, right? Let's say exactly the same example of a business. Let's say you start selling at $20, there's less demand. You start selling at $18, right? Let's say you start selling at $20, there are 10 customers, right? Let's say you increase our price to 25, the customers even go down, right? So exactly the same way. Financial markets, exactly the same way. It's an auction process where you have buyers and you have sellers, and both parties each and every single day are trying to assess, trying to find the fair value of a particular asset. Now, in the financial markets, the supply and demand zones are created by institutions. They are not created by retail. They are created by institutions. And institutional behavior can be categorized in 4 major phases. Institutions have accumulation phase, markup phase, distribution phase, and markdown phase. Now, what those phases are, they are very, very important. And again, later on, we are going to have a deeper dive on charts as well. And we can see how these phases are directly related to the day trading. So an accumulation phase is basically a consolidation phase. It's a phase when the stock does not really do much. It just stays in a very, very strong range, right? And usually you see on the tape, on the time and sales, on the L2 level on tape, you see a lot of bids, lot of orders, a lot of volume being traded. Now that is a very, very strong and typical sign, and that someone is accumulating a position. The very, very visual sign is that the stock fails to bid below a certain level. That is indication that institutions are accumulating. Now, let's say that the stock breaks higher, breaks that accumulation phase, and goes, the stock price keeps on going higher. Now, that is a very, very typical markup phase. That is a phase usually when retail tries to jump, when the retail starts taking positions. Now, a good trade for us is not to get involved in here, but rather to get involved somehow in this phase, in this stage. And later on, again, we are going to have a deeper dive on how can we identify that zone and take a position before the crowd jumps on the trade, right? Now, what usually happens, we go for a massive run, then we start consolidating in a very, very tight range again. We break that range, again, go for a run, consolidate, run, and so on and so forth, right? Until that momentum dies down and we enter a distribution phase. Now that in a day trading world is also called that very strong resistance has been found, also called that the stock has topped. There are different terminologies for that, but that usually is a distribution phase. It's a phase when big institutions who have accumulated the positions in here, they start distributing, right? They start distributing, they start taking profits, and then the momentum basically dies down and we start going lower, right? Now this cycle gets repeated every single time in almost all of the instruments, in all the markets, right? Now the question becomes, okay, we know the cycle, we know how institutions operate, how do we identify those zones and how we can actually use that information and make good trading decisions on daily basis. Now identifying those zones comes down to locking in and looking at the particular stock, looking at the particular ticker, understanding the market context, understanding the trend on the particular stock and taking it from there, right? Now coming back to the previous example, we do not want to get involved in the markup phase, right? We do not want to jump on a running train. We ideally want to get involved either in the accumulation phase or when the stock comes down to retest that accumulation phase. That is the entry point for us. And the reasoning behind that entry point is the following. When the stock comes back to retest that zone, all the institutions who have accumulated here, they will come back heavy and they will defend that level. Now you want to get aligned with the way institutions are trading. You do not want to get on the opposite side, right? So that's where the good optimal entry point is, right? You get involved here, put your stop loss right below that zone, and let the stock do what it wants to do, right? Now again, here a very typical example, right? Either this is a very, for example, let's say very strong demand zone gets broken, supply is found, stock comes back to the demand zone. Now this is the area to get involved for a good risk reward trade. Your stop loss right here in case your trade gets invalidated. This is a very good risk to reward trade right here. Now let's apply this information and let's go to the real charts and see how can we use this information to make good trading decision. Now let's see, this is a stock, Robinhood. Right now Robinhood is a very interesting stock, is very famous in the retail space. What do we see in this specific chart? We see the first thing that we see that the stock is uptrending. It is in a very strong uptrend. It goes for a massive run from 50 to almost 100. Now when it goes from 50 to 100, it starts taking a pause. Right now what is happening in this area? Let's have a deeper dive. It starts taking up a pause and it starts consolidating in this 100 area. Sorry, my chart looks a little bit messy because I've been trading this, so I have a lot of levels here. But focus on this zone. Focus on this entire zone. What happens? It starts consolidating. What does a typical consolidation looks like? Goes higher, comes back. Goes higher, comes back. Goes higher, comes back. But what is the most important takeaway in this entire consolidation phase? The most important takeaway in this entire consolidation phase, that each and every time the price comes back to test this area of 99 to 100 zone, it gets bid up. Each and every time the price comes to this zone, someone defends it and buys in heavy. Right now, this is exactly what we were talking about earlier. We do not want to chase in here, right? We want to chase, or we want to get involved where institutions are accumulating, or where institutions are consolidating, where institutions are putting a massive bid. And right here, this particular chart, Robinhood, every single time the stock comes into 9800 zone, there's someone's taking a bigger position. Someone defends a price. And after that big consolidation is over, what happens? We go for a massive 30% run from 100 all the way to 130, right? Now, let's go back to right here. This is exactly what we were talking about, right? Now, this is where you want to get involved. We do not want to chase the train. We do not want to chase when, let's say, when the stock is going for 128, 125, 130, because that is the zone, that's the area when folks are taking profits. That's not the area to take a trade, right? That's not. Now, if you are a scalper, right now, that's a completely different story. But when speaking about the good risk reward trade, you want to get aligned when the stock retests the zone and then take it from here, or when after a massive run, the stock goes in a very, very strong consolidation zone, right? Now, in this particular example, we have seen consolidation zone has been established, right? Every single time it comes down to this area, someone buys in heavy, and that's the zone we want to get involved with, right? Let's look at some other examples. There are a lot of examples if you just go through your charts, right? Let's look at, for example, AMD, another very, very good example. Has been in a very, very strong downtrend, breaks that downtrend, makes highs, and comes back to sort of retest the demand zone. Now, if I look at this chart, what are the 2 to 3 takeaways that I can have, right? The first takeaway that I can have from looking at this chart is that the big trend line that it was in, let's go to the weekly actually to have a bigger picture, that the big downward pressure, the big downward trend line, it broke that trend line and it went for a massive run, right? That's a big takeaway. Now, if I go to the daily chart, the second takeaway I have that the stock is stabilizing in this 150 range, right? The second big takeaway, right? The third takeaway that I can have is that every single time the stock comes to in this 150 to 152 zone, someone is bidding heavy. Every single time the stock trades this area, someone places a massive bid and defends that price. Now, this is a very, very typical situation, very, very typical example of buyers defending a zone, buyers defending a price, right? Now, this is not a financial advice. This is not a financial recommendation. But to me, looking at the structure, this is what the chart is telling me, that each and every time the stock comes down to this area, someone goes in and defends the price. Now, that's a very, very typical example of institutional trade. Third takeaway that we have when we look at this chart is that 160, 165, 163 area has been acting as a resistance for now. Now, there are two scenarios that could play out. If we break that resistance zones, we are likely going for a big move. Right now, that again aligns with the institutional pattern of running, coming back, retesting, consolidating, and going for another run. The second potential scenario could be if we break this 150 zone on an aggressive volume. Now, that could happen due to multiple reasons, right? Let's say there's a news tomorrow. Let's say the market starts selling off to, like, it's the end of the day. It's the end of the world, right? Let's say that the Trump administration comes with some massive restrictions on the chips industry, right? And we just go for a massive sell-off. So let's say if there is a catalyst that fundamentally changes the economics of the company and how the numbers look like, that could be a catalyst for the sellers to take over. But for now, just looking at the chart, this is the information that the stock is giving me, right? Very strong buying area. Now, this is how coming back to identifying the zones, this is how we basically identify our substitution zones, the demand zones, the zones where putting a trade makes a sense from a risk reward point of view. Now let's move forward and let's look at a potential scenario of supply and demand on order flow. Now order flow is a very different topic and a completely different topic, and we will likely have another webinar covering in detail the supply and demand from an order flow perspective. But just to give you guys an idea, if you guys an order flow trader, how would supply and demand look like on the tape? Now from an order flow perspective, there are two major types of orders. You have the limit orders, or let's say limit buy orders, right? In this case, they are limit buy orders, and you have limit sell orders. Right? Now on a typical tape, on a typical day, from a demand and supply perspective. Now again, guys, here we are narrowing it down to the 5-minute time frame. Right now we are sort of micromanaging the daily session. On a micro structure, on a micro time frame on the tape, this is how from a order flow perspective, supply and demand look like. You will see massive liquidity sitting on a certain price level, right? That is a very typical behavior of passive liquidity, passive buyers sitting at a certain level. Now, as a price trades into that level, in your time and sales, you will see those orders getting filled, right? And number two, those orders getting filled with heavy volume and with heavy size. That is a very good sign, an example of that someone is trying to get filled at that certain price with a lot of volume. That again is an indication of a passive buyer trying to get involved at a certain price. Now from once those orders are filled, you will see price stabilizing and find footing. If the price starts finding footing, you will have market orders then coming in very strong and going for an aggressive move. Now again, this is a completely different topic. In this particular webinar, we are not going to go in detail on the order flow perspective of supply and demand. The idea was in here, that the reason I'm just discussing it here was just to introduce you guys to this to this idea of looking at supply and demand from an order flow perspective. We will likely have another webinar where we will go at a deeper level onto supply and demand and see, how we can integrate, how we can basically recognize those orders on a typical session. So now moving forward, just sort of quickly looking at how we can identify those supply and demand zones on a bigger time frame. Now let's go again at the previous example that we discussed. Whenever you want to identify institutional activity, you have to start from a bigger time frame. Why? Because the bigger the time frame is, the more stronger those levels are. Because once you look from a helicopter view, you get an idea of where the demand is sitting, what's the trend of the market, where the demand is sitting, and what are the areas where folks are trying to accumulate. From a higher time frame, when we speak about a higher time frame, we are speaking about the weekly chart, we are speaking about the daily chart, and basically taking it from there. The idea is that we start from this higher time frame and we narrow it down. From higher time frame, we are coming to the lower time frame. From lower time frame, that's where we're talking about 4 hours, that's where we're talking about hourly candles, that's where we're talking about 30 minutes, that's where we're talking about 15, and so on and so forth, right? Now we are having a deeper dive into the day trading, right? Now let's try and let's look at this example and focus on a particular example, right? Let's go back to our charts. Let's try to identify, for example, in this AMD case, right? Now, if we go to the weekly chart, as we discussed earlier, It's giving me a lot more information versus if I were to just look at the 15-minute chart, right? If I look at the weekly chart, it is telling me where there's a lot of demand being created. What is that trend on AMD, where the demand is being created. Now from the weekly, I go to daily, and that's where I'm looking at what are the actionable levels. Why 150 is actionable level? Why why at 152? There are a lot of folks buying in, right? Let's look at some other ticker. Another good name that I trade a lot is, for example, MP. Right, MP has been another very interesting name. It's a rare earth play, and given that the Trump administration is heavily backing the rare earth industry, this name has been ripping like no tomorrow. Right now, starting with the weekly time frame, what do we see? What we are seeing that the stock is in a big uptrend. Right, this is a very typical example of an uptrend. From the weekly, we are going to the daily, and there's one big takeaway. When I look at the daily chart, and again, I have looked at the tape for this particular ticker. I have traded this ticker multiple times, and this is a takeaway. Every single time the stock traded the 60 zone, 60.58, massive bid on the tape, and each and every single time the stock came here, someone defended this name very strongly. What happens? 60 gets bid up, we go back for a massive run all the way to 82, making all-time highs. First phase. Second phase, we go for a retracement. Where do we retrace to? We retrace to exactly back to that 60 zone. And what happens here? That buyer defends the price again, and we go for another all-time high, almost all-time high at around 82.50s. Now here, this is the story of the last session. Things become little interesting. Why? Because the stock got rejected very heavily at this area, and is putting a very strong bearish candle. Now what I want to see, in case we do come back, are these institutional buyers interested again? Right now, typically here, this is sort of giving the vibes of a distribution phase, but if the price comes back to the zone, are those guys interested again? If they are, this is the area to sort of get involved for a good risk to reward trade. Now again, I'm not giving a financial advice, I'm not giving a recommendation. What we want to see is a price ideally stabilizing above this area, and for a potential continuation of the trend, go higher. Now if the stock breaks this area, that means this beautiful uptrend is going to take a little pause. Right, so coming back to our example, our way to identify those zones. Let's actually look at another ticker, which is let's say Apple. Right, Apple is another very good name. Apple has been underperforming the market this year. We start from the weekly time frame. What we are looking from the weekly time frame, that there's a lot of activity happening between 200 and 210 zone. Right, every single time the stock comes here, it gets a bid at 200. Now from here, we refine that, we go to a lower time frame, and we see that it is having a lot of difficulty in breaking that 200 zone. Right, once it breaks, now this is a very typical example of the accumulation phase, where folks are accumulating heavy. Now once it breaks that zone, it goes for a massive run to the upside, almost all-time highs. Right, so again, our job as a trader, coming back to our previous examples of how to identify those institutional zones, our job as a trader is to look from the bigger time frame, understand the trend of the market, the trend of a particular stock. From that trend, from bigger time frame, try to narrow it down to the institutional demand zones and institutional supply zones. So this is basically how supply and demand works. Again, this is the most basic and most fundamental way to look at the supply and demands. Again, we will have another look at the order flow, which is a completely different topic in some other webinar. Now, how I take this information and how I trade, and how again you can integrate this information in your daily trading. This is a typical example of my trading journal, TradeZella. Every single day before the market opens, I make a game plan, right? In my game plan, I look at the context. What is the context of the market, right? What is the line in the sand of the market? So for example, in this particular day, I'm writing, okay, the market is kicking off the week with all-time highs right now. When the market is at all-time highs, which means the accumulation has already happened, right? And now we're in the markup phase. When we are at all-time highs, there are two possible scenarios that could play out. One possible scenario is a look above and a fail type of scenario, right? When the prices fails to go higher, right? Now that usually provides good short opportunities. Second potential scenario of the day is a continuation of price discovery, that the price keeps on going higher, right? Now again, this is where we are narrowing it down to the 5 minutes time frame. This is where we are narrowing it down to the daily time frame, and we are sort of trying to identify what are the zones coming from the higher time frame, from the weekly to the daily, right, to the 5 minutes, and we are trying to identify what are the actionable levels which are interested, which I am interested in for the day trading. Now that particular day, these are the examples I just discussed. For example, Apple mega structure levels. What we saw in Apple, right? Massive 200 zone, and it is finally trying to break that zone, right? Which means someone accumulated it heavily here, and now we are looking at a potential markup phase, right? Second stock I was looking at this particular day is MP. MP is that 60 has been a big bid level. Someone is accumulating heavily in that zone. Now if 60 is bid higher, there's a good possibility for a continuation move above 60 and basically taking it from there. Now again, let's go back to our chart, right here. This is what we were discussing. Very strong break, and there's a possibility that this accumulation phase will be ended and will likely go higher. Now this is again very typical example of supply and demand. A lot of demand accumulated in this zone, and now the big guys, they will likely run it, like, right? This is exactly what's happening. Same if we go with MP, right? Exactly the same scenario. Tesla, another very good example. Now, sorry, my chart looks very messy, but exactly the same scenario. Big accumulation in this entire 350 to 300 zone. Every single time comes here, gets sort of bid up, and now we go for a massive run to the upside, right? Now, again, the same scenario sort of playing out here. The stock is consolidating after a massive run in this entire 400 zone, right? So coming back to our supply and demand examples, and to sum everything up, this is supply and demand at the most basic level. Our job as a trader is to identify those zones where accumulation is happening, where consolidation is happening, try to get involved in those areas and for a good risk to reward trade, and basically take it from there. Okay, so to sum up, guys, this is how supply and demand works at the most basic level. Our job as our traders is to identify those institutional zones, look where folks are taking positions, look at the tape where the volume is being traded, with what size the volume is being traded, and basically take it from there. I hope this provided you guys with a lot of value. Don't forget to hit the like and subscribe button, and I will see you guys in the next video.